Today we're going to take one more look at your finances. We've looked at them for looking at one of the four functions of your business area: finances, marketing, human resources, and operations. Today we're going to look at it just so you have a very good, solid understanding of where your finances are and how you're going to use them to incorporate them into your operations on the farm so you can make a profit. And without making a profit, you're not sustainable. So this is what I consider the second most important part of your business operation. So let's get started. As we go through this class today, here are some key outcomes that I hope you will learn and take away from it. Let's start off by looking how you make decisions. We'll do this with a quick exercise. Write down at least 3 items, one that is smaller size in purchase like food or hand tools, a medium-sized purchase, something larger, maybe some kitchen appliances or something, and a large purchase like a vehicle or paying for a college education or an extra building on the farm. Note what your decision-making process is for the different types of expenses. How do you respond, similarly or differently, for each situation? What helps you be successful? What creates unnecessary challenges? And how does having a long-range goal help you make decisions? To help in this effort, we're going to look at mastering the basics. What is wealth? And what is financial planning versus financial accounting? They're very different. What is profit? And we're going to look at prioritizing your time and your money. Just what is wealth and how do we measure it? Here we show that there are 3 basic sources of wealth you use to run your farm. You have solar dollars, paper dollars, and nature's dollars. Here's a brief explanation of each. Now you know the 3 areas of wealth. What's the source of your wealth? Let's do another exercise. Think through your assets. List them under the appropriate category. How might you like to change your source of wealth? And how would that move you towards your holistic goal? Here is how Holistic Management International defines or lists some of the key distinctions between financial planning versus accounting. Note, financial planning is not complete without the monitoring feedback loop, which creates transparency, awareness of where your money is going, and responsiveness within the team. Financial planning is not an accountant's job, but the job of the management team. If people are going to be held responsible for generating income or holding down expenses, they must be allowed to manage the wealth under their control. So let's do another exercise. How do you determine profit? What was the percentage of profit you achieved last year? And what would you like to achieve this year? Conventional planning often has you plan production and associated revenue, plan expenses, and then check to see if there is any profit left over. The means to achieve the profit may be socially or economically or environmentally unsound. Your farm's financial planning should plan for profit first, then test the means of production for social, financial, and environmental soundness. This simple paradigm shift from production to a profitable triple bottom line helps you move people from maintenance mode to an investment mode or strategic mode that will move them towards their holistic goal. Because time is money, and money is time, financial planning also addresses time management. You need to prioritize your time to ensure the best returns. That said, sometimes the best returns evokes taking a family vacation that you keep postponing, or the other quality of life considerations you've deemed important. Here are some key questions for financial planning. What is your financial weak link? Energy and money sources that you're going to use. You need to identify them. I think you should do a marginal reaction test, and this way you can figure out your gross profit through a gross profit analysis. Illustrated here are some financial weak links for the farmer, the abattoir, the butcher, neat wool agent, spinner, and the tailor shop. Notice that they're all different. Each has a weak link that they have identified. Now let's narrow our scope. Let's go down to the different types of farming, whether you're a livestock operation, a crop farming operation, or just a small business. Here are some associated weak links that could go with those operations. Once you have completed doing a weak link test, let's do a marginal reaction test. The marginal reaction test is used when comparing 2 or more possible actions. It asks the question, which action provides the greatest return in terms of time or money spent? In other words, it's basically saying, where are you getting the best bang for the buck? Let's do an exercise. Compare the marginal reaction of two possible actions that will address a weak link in an enterprise. Make sure to consider money and time. We will follow the marginal reaction test up with a gross profit analysis test. The gross profit analysis test is used when you're comparing two or more enterprises, just like the marginal reaction test. However, this time you're asking yourself which enterprise contributes most to covering the fixed costs or overhead of the business. And the difference between money in and money out is the gross profit. So gross profit analysis is used anytime you consider adding a new enterprise, dropping an old one, or modifying an existing one. You may ask yourself, when to do a gross profit analysis? When is it appropriate? Well, do it in the preliminary planning when comparing new or existing enterprises to select the one that will provide the best return. Assessing or brainstorming a list of possible enterprises, or when you're determining the final enterprise. You should always do a gross profit analysis to make sure that you are covering expenses and making the profit you want to make. When doing your gross profit analysis, here are some questions you should consider. How will different conditions such as price changes affect the gross profit of each enterprise? How will diverting assets from one enterprise to another affect the gross profit of each? And how will diverting investments from several enterprises into the expansion of one favored enterprise affect the gross profit overall? When looking at best, average, and worst case scenarios, remember least controllable factors. These are the things we consider risk to that enterprise. And when comparing gross profits, determine what unit of measurement you will use to compare: hectares, acres, labor hours, or money. And after financial planning is rechecked at year's end, check to make sure that your performance has met your profit goals. Here is an illustration of gross profit analysis of fed versus pastured dairy cattle. Notice the different ways we look at it has a great impact on the amount of profit and return from your investment. So sit down now and do your gross profit analysis exercise. Compare two current enterprises by figuring income, variable expenses, and gross profit for each. Make notes as to your reasoning and results using this one testing question. Now let's look at some of the financial management tips or ideas. We'll look at simple appreciation, the decision-making matrix, brainstorming, and your net managerial income. Let's do a simple appreciation exercise. What I want you to do is assess a situation where something went wrong or a critical decision in your life just didn't go the way you'd planned. Do a simple appreciation of that situation. Here is a very, very simple decision-making matrix. We've listed 3 areas that we're going to consider: sustainable, profitable, and marketability. And here's some of the areas that you consider underneath those areas and list them out and see how they impact on your decision. Here is a list of some simple brainstorming considerations. The number 1 is make sure the objectives of the brainstorming session is clear and understood by everyone. Everyone needs to know why and what it is that you're trying to achieve. Another one is make sure everyone is contributing. You'll have people on your brainstorming team that will just sit back and not contribute. Everyone has a good idea or some input to a brainstorming session. Make sure you make the session warm and friendly and that they feel able to contribute without criticism and or negative comments. Brainstorming is a key component at looking at new enterprises and figuring out how to do your operation. When you were doing your human resources evaluation for your business plan, we considered the tasks that needed to be done under managing the operation. Now we're going to look at net managerial income. If you're intent on providing a bonus for your employees, consider using this technique, which bases the bonus on a percentage of what we call the net managerial income. NMI is the difference between gross income and gross expenses, taking into account only income and expenses under the direct control of the manager. It is a true measure of managerial effectiveness, and it places a pressure on the manager to both increase income and decrease cost. Now that you've looked at these areas and done the exercises, let's create your plan. Identify the financial planning team, create the planning schedule, consider is there a logjam that you need to address, and what other adverse factors. Are current enterprises profitable? And brainstorming new sources of income might be beneficial at this point. Lastly, make sure you have identified any weak links and addressed how to solve them. Over the many years that I have advised farms on how to do their finances, here is a list of ways that I have found that you can fail to make a profit or how you could create a profit. If you fail to plan, you'll almost certainly fail to make the profit that you could make. Allow production costs to rise will also impact on your profit. Now, if you want to create a profit, calculate your total gross income, then set aside up to 50% of your profit. Spread the difference between income and cost to push profits up, and cut down on the expenses. If you don't need new equipment, don't buy it. If you don't need to do an action supporting your operation, don't take it. And if you're spending way too much time when you have ways to be more efficient, that is the way to do your business. Here is a list of 14 different areas that you can develop into paragraphs or pages to address each topic. Use this as a template and you fill it in with your information. Lastly, any good plan has to have a monitoring loop, a good feedback loop. You need to be able to get feedback from your operation to see how it's deviating from the plan or any unexpected deviations that might cause a major shift in resources, time, or managerial needs. If, during the feedback loop, you notice that there's a deviation and something is not going as planned, then you need to identify it and quickly correct it, or assess whether it's going off plan because the plan was faulty to start with. Quick, efficient feedback is a must. You can print this control sheet off and, by column, look at those areas or those paragraphs that you've written and write in any deviation. Just that way you can track the changes or things that need your attention according to your financial plan.